Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin. Dennis Dick is here with us, but he will not be on our show for about 10 minutes. We're going to call him on his phone at around 8:10, and then he'll be with us on video at like 8:25-ish. He had to drop his kid off at school. Don't you hate that, Joel? So, or daycare, excuse school or daycare.
Yeah,
so
it's been a long time.
It's been a long time. Right. So in the meantime, it'll be just Joel and I for the first few minutes here. We got a lot to discuss, though. Tech stocks that broke out yesterday, we're going to discuss a few of those. And that's sort of in line with the theme of the week, which is CES. A lot of news coming out of Vegas on the tech front. So we'll get to some of those headlines as well. A lot of ratings to discuss this morning, both upgrades and downgrades. So we'll get through as many of those as we can. We'll take some questions from our chat, and our guest today at 8:35 we'll be joined by Ryan Detrick, who is a senior market strategist at LPL Financial. Great follow on Twitter as well at Ryan Detrick. Joel, what's the word here overnight?
We got some green here, Spencer. Up 1 3/4 handles at 45 1/4. That's 32.45 1/4. Continued to the rally yesterday into the 32.50 handle. Really nothing up there at 54.50. So that's a target on the upside. Your all-time closing high, that came Thursday at 32.59. Your all-time high happened Friday after hours. That was a pre-market at 32.63.50. There's the big numbers we're looking at on the upside. On the downside, if we ever go down, your pre-market low is just below the close of 43.50. 41.75 marks your pre-market low. Really can't find much for you folks under that. Another 5-handle drop, 32.35. Have a lot of numbers in that area. Crude giving a little back, down 57 cents here at 62.70. Keep an eye on unchanged now in the crude market after that big move yesterday. And let's see, the 2-day low on that is way down at 61.13. So there's your next target if you're looking for some more downside. Gold, giving some back to, got close to 1,600, peeled back yesterday, down 70 cents here at 15.68. You have silver in the red too by 3.9 cents at 18.14. And don't look now, bud, here comes Bitcoin. That's up $325. The futures at 7,940. I noticed on the futures yesterday that there was some pretty good volume coming into that contract, and it was on 3 green days. So probably should have picked up a little GBTC or something. But when I was looking at on Friday, nearly 8,000 contracts traded on an up day. Big up day or decent up day on Monday. Another 6,000 contracts. And we've already traded 4,000 today. That's some of the highest volume we've had in Bitcoin since December 18th. So let's see if we can clear that $8,000 hurdle.
So I want to start off with Joel with some of these tech stocks that broke out yesterday. Google specifically, right?
The Google story.
Google lagged, didn't have as great a year last year as some of its peers. But if yesterday is a sign, then it's going to be a good year, a catch-up year, you could say, for
sure.
Google.
Knocking on the door of 1,400 here. Broke out. You had a pair of highs in the same area at, just call it 1370. Got, yesterday's low. If you were trying to buy 45.54, you couldn't do that. 1350 was the low. Hard stocks to follow. I'll just keep an eye on this closing price here. If I was initiating a short, that's where I would want to try and bring it in, 94.21. If I was trying to long in this, I think that would be, I would wait for a pullback to the area. All-time high here, 1396.50 from yesterday. Trading above that here, or just at that area in pre-market trading. But you know how I hate I hate $1,000 stocks. So
Yeah, you don't love them.
I don't.
You don't love 'em.
I mean, it's you try and do levels on these things. It's just too wide. And if you trade them, you got to trade them smaller. But they need to do like 10 for 1, 10 for 1, or 20 for 1. But they won't, because having a high stock price is prestigious on Wall Street. But looking good. I guess a war is good for the FANG stocks. That was something that Dennis tweeted out yesterday. So.
Yeah. Well, I mean, one thing war could be good for cybersecurity stocks, and that sector broke out. CyberArk, for past couple of days too. CyberArk, FireEye. Let's look at a few of these names because they're
Who called this? Who called this?
Who called it?
Yeah, who called this move?
Did you?
On our show.
Is that the answer? Is it you?
Nope.
No.
Nope. I'm not going to take credit for
some. I mean, people in our chat have been talking these stocks up for
no. Do you not pay attention during the show?
I do pay attention.
You don't pay attention to the guests.
I do pay attention to the guests, but I can't remember what every guest says. All right, who? Chris.
Robin pays a little bit more attention than you did.
I'm sorry.
It's a lady guest.
Well, it wasn't recently. It was.
Yes, it was. It was very recent.
I'm trying to find what Robin said in the chat. Anne Marie. Okay.
Yeah, you cheated.
Okay. Yeah, I cheated. That was like 2 weeks ago. I can't remember what she. I cannot remember what she said. It was 2 weeks ago. I cannot remember what she said 2 weeks ago. I'm sorry.
That was your call.
It was before I went on. It was the Friday before I went on vacation. Everything before that is a black hole for me.
And I think I said something. Maybe we should roll the tape. And I said something about. Are we going to war or something? And everyone,
you're right. Okay.
And everyone
now
was
that,
like, Joel's talking war. And then Trump listens to the show and he starts a war.
Right. Now that you mention it, I remember her saying that. But you're right.
Okay.
She did say that on Friday the 27th.
Yeah, she did. So we should roll that. Might be a good article.
But CyberArk, I mean, look at that. FireEye, a few of these stocks have had very good starts to the year.
Yeah, FireEye. I mean, if you want to go with the perennial dog, that's up another 51 cents. Maybe this is finally getting off the mat. CyberArk, a good move. Trading up again, $1.61 at 128.39. What did you have here? Boom, we're above the earnings high. Oh, we're getting in an area of pretty thin resistance here. Let's see, where can we go here in CyberArk? 141.65 is too high, but that's your monthly high from August. But go back and take it. If you're looking for a target here, you don't want to hold out for 141.65. I'm sure you can find some daily highs to lean on. Better it be a double top or triple top, in the 130 handle.
Palo Alto, Proof Point, PFPT, just a few others. I haven't looked at every stock in this sector, but there's just a few other names that
looks like it. Look at that PFPT. That looks like that's ready to go. It got right up to resistance yesterday. What was the high? High from yesterday was 2065. You had another pesky high at 1999. Another high. I mean, 120. That could be a breakout there for Proof. What is it? Proof Point Inc.
Yeah, and then CrowdStrike too. Great day yesterday.
CrowdStrike. CRWD. Very good day. Continuation of a 2-day move. This might have been one to have been keeping an eye on early in the morning, because you like 51. Not really 51. It kind of broke out the day before out of 50.5. When it went through yesterday's Friday's high at 51.99, it was off to the races. Let's see your next daily high. Let's see where this comes in at. Well, we're trading down 61 cents. So use yesterday's high as your first target, and then be careful because 57 was a high on December 4th as well.
All right, we're going to try something, and I'm going to call Dennis on his cell.
You're going to call Dennis on his cell. How is he going to be? I mean, does he have all the computers in his car?
I don't know. He insisted. Dennis.
Hello.
Okay, Dennis,
what's going on?
Can you hear me?
Are we live?
We are, yes. Why are you in your car, Dennis? Come back.
I know this is weird for me. This is a weird morning for me. So my wife had a minor surgery just yesterday. She's doing well, but she's on bed rest for a day or two. So I'm kind of doing it all here this morning. So I got to get the 2 kids, breakfast, dressed, off to school, so I got to get the boy. He hits the bus at 7:54, and then I get the girl to daycare. So I just dropped the girl off at daycare, and I'm now about 5 minutes from home. So once I get home, I get in my stock, and I can get into my system. So I'm going to use you guys today because I have no idea what's going on because I've been doing kids all morning. So tell me, Mr. Israel, tell me, Mr. Elconin, what is happening here in the market?
Well, first of all, did you go to Tim Hortons before you dropped her off or on the way?
I don't drink coffee, but I'll tell you, if my wife was driving, she would definitely be going to Tim Hortons before going to the daycare. So Tim Hortons gets money from us, I think, every day from my wife. So, yeah. But I don't drink coffee. I'm just on natural adrenaline all the time. I'm on adrenaline from that Connor McDavid goal last night. Did you guys see that?
I did, yes.
Did you see that goal? You should almost show that on the show. I've never seen a goal like that. That was impressive. Anyways, it was a big win. It was Canada versus Canada, Oilers versus the Leafs. The Oilers haven't beat the Leafs in like 5 years, and Connor McDavid put on a show last night, and finally the Oilers have victory in Toronto.
Man,
so I'm on adrenaline from that, so I don't need coffee.
Yeah, you are wound up this morning. But don't the kids know that you have to trade? I mean, come on.
I know the kids should just have to wait to go to school until the trading's done. But
we've been talking tech stocks so far, that specifically stocks that broke out yesterday. Google, cybersecurity. We didn't get to Roku yet, but all these names had great days yesterday. I'm sure you saw that.
Yeah, and you know, it's predictable. It's funny. I actually tweeted this out, and somebody was tweeting, war equals buy FANG. And I was like, well, that can make some sense because if you're scared about war, you don't leave the house. So Facebook, Amazon, Netflix, Google, those are all plays for not leaving the house. So they bought FANG yesterday because they're scared about the war. It all makes sense, Spencer.
Doesn't make sense to me, but okay.
Kind of sounds like
it's a bit of a joke, but somebody like me, I never leave the house. So now I actually left the house today, so I get to see the world. I'm like, holy cow, there's traffic, there's stuff going on out here because I don't leave the house half the time. So, but the tech stock rally was very impressive yesterday, and it was across the board in the tech, and you did see other defensive stocks start to sell off as well. So you've seen the natural rotation again. It's just a repeat of what has been happening basically in November, December. Tech stocks are winning once again.
Yeah, we talked about it. Some of the defense stocks did sell off from their pre-market levels, but those are higher price stocks and a little bit thinner.
Yeah, when I say defense, I meant I didn't mean the Lockheed Martin's actual defense for the war stock. I was actually talking about like your Coca-Colas, your Procter and Gamble's, your XLP components. Those are the stocks that I don't see those stocks participating in the next, if we're going to get in the next bull run, I said this a couple days ago on the show, I don't think those are the stocks we want to be in. I see those stocks leveling out or even going down as the natural rotation continues. I mean, I don't see what's going to derail this bull train anytime soon. So I think you got all the money managers sitting there waiting for a pullback. They got a little bit of a pullback yesterday morning, and they come in and they just start scooping up tech stocks again. It's the same stocks that keep driving us higher here. Eventually, we will get a significant pullback here because, Apple up 100% last year, but it's hard to time that, and why fight the trend? The trend right now is to buy those stocks on pullbacks, and I'm going to stay fully long on my tech stocks here right now. I'm not nervous about them at all.
And for the overall market?
At least not right now.
For the overall market, we talked about this last week. The first real test of this recent breakout from November, October was these new tensions in Iran. What will they do? Well, they ignored it. They bought the dip like they always
completely
have. So we talked about that.
Yeah.
This was the first test, and the market passed.
Yeah, the more the macro political environment changes, the more the market stays the same. It's simply buy the dip. And we saw it yesterday again. The buying the dip mentality just has not left. You cannot spook this overall market here. It stays spooked for a few minutes. The people who are spooked are the people who are underinvested. That is who is spooked. And every time you pull back 1%, the money manager's coming in and scooping up stock because there's so many people who probably thought, we've come too far. There's people who have been playing this market from the short side, and they're really in trouble. So, speculating that, okay, well, we've got war tensions now. People shorting overnight. I mean, on the first news of the war, we were down 40 handles that night. There were some people selling stock and some people selling the futures. Those people are all caught now, too. So I don't see what derails this rally anytime soon. I mean, anything can happen. Stuff happens overnight, and risk happens fast. But as of right now, they're shrugging off any worries, even on the war front.
And we got a jobs number coming up on Friday. So, I mean, that information, I'm sure they're going to keep low unemployment again, or even lower. One stock you missed out, Salesforce.com had a great day yesterday too, busting out to a new all-time high. That had a huge day. Did they have an upgrade from somebody? Salesforce yesterday?
Yeah, they had something yesterday. It was RBC upgraded them to their top pick. We talked about that.
Overnight, yeah.
Right, and they raised their price target.
Did you look? Have you looked at any quotes, Dennis? Have you looked at your phone at all?
I haven't seen anything. I just looked at the futures quotes. I know when I looked about 30 minutes ago, we were basically flat.
Where do you?
So what are we doing now?
We're up a buck in the S&P. Down 7.
We're quiet overall in the market. Yeah.
Yeah.
I did notice. Like I took a quick look. It looked like a lot of ratings. So we knew that the analysts were going to be busy here, coming out of their Christmas holidays and their obviously New Year's holidays here. So the analysts were really busy here overnight. I saw it was like, what is there, like 50 or 60 upgrades, downgrades, Spencer? Looked like a pile.
About that, yeah. There's a lot, and we can get to that throughout the show. But we've got ratings on retail, on financials, some energy, I think, some home builders, some consumer staples, a lot of ratings. Tech, a lot of ratings this morning.
Lombardo 141 likes you on the telephone, Dennis, and he wants to make.
You know why? Because you don't just see my hair, my bad hair. There's no way to, but the bad hair indicator, it's really bad here today. I'll tell you that.
All right. All right. So
you're gonna see me. I'm actually 2 minutes from home here right now, so maybe I'll hang up with you and I'll pop back on in 5 minutes on my regular Skype.
Before you go, just for a milkshake, can you tell me where Tesla is trading within $2? It closed.
Oh man!
It traded at 451.54. That was the close from yesterday.
Yeah, I'm gonna say Tesla's probably up again. 455.
450.
Just for fun.
459.
Up another. Is there somebody upgraded it? Was there any news? Just squeeze them.
The news was I think it's more of a squeeze, but they did have news. It's China. The Model 3's launched in China, and they announced a Model Y program, but it's probably more. It's probably more of a squeeze. I mean, that was no news. The launch of their Model 3 in China.
I mean, why not 500? You've come this far. 459. I mean, and I said it a couple days ago on the show. I said I could see how this thing would be $500-600 eventually. I think you're going to see 500 before. The way it's going, you're going to see it before the end of the month, but I don't know if you're going to see it that soon. And you could have, some news, you got some pullbacks, but I think you're going to see the stock at 500. Right now, I would say easily 500 before 400, but, if anybody's making that bet, they'd be giving up the edge because 459.
Yep.
But I this path of least resistance is still higher here. The shorts have just been murdered on it. And just a vision, if you're short this stock, and it pulls back $20, you're probably thinking, okay, I got to get out, cover some. You're just hoping for any pullback to buy. So there's so much underneath demand here, not only from the shorts, but people who want to believe in the story here now too. So do the fundamentals, justify a $459 price? Probably not, but it doesn't matter. The story matters more than fundamentals all day, every day. We've talked about this on the show for years. This market is all about a good story. You got a good story, it can stay hot for a long time before the fundamentals really matter.
We'll let you hop out of your car, but in the next week or so, we got someone that's shorting Tesla and shorting more into earnings, and we're gonna get them on the show and hear what they're.
Yeah, bring them on.
Yep.
I like to hear the bear arguments. I mean, we've heard them, but the bears have been quiet on Tesla for a while here, so maybe maybe they got some new case here. Maybe they talk me out of it. But right now, I just don't see any reason to. If you're along this thing, I don't see a reason to sell here right now.
All right.
Wish I was long. I wish I was long.
Get to the house there and ping us, and
I'll be with you in 5 minutes.
Okay. All right.
That was fun,
Dennis. So if you're in your car, you can't call us. We never got any phone calls when we tried that, did we?
No, we didn't. But now you have no excuse not to listen in your car if Dennis can call us in from his car and do the show. But no, I mean, we never got any phone calls. I'll give you the number again. I stopped giving it because nobody called us. But if you want to call us and leave us a voicemail and ask a question that way, you can do that. The number is 734-494. I'm sorry. Yes, 734-494-0246. Give us a call. It's gonna go to a Google Voice account. Leave a voicemail, and if we like your question, we'll play it on the air, and we can answer it that way, or just ask questions via the chat. That always works too. So let's get to some of these ratings, Joel. As Dennis mentioned, there are a lot this morning. Let's start with tech here. Cowen and Company is upgrading Western Digital and Micron to outperform this morning.
Boy, oh boy. Dennis bought that Western Digital when it came down. I balked on it. Came to that $40 area. That was a while ago. I know he's long gone. It's turned. It's up $1.90, 65.27. Pre-market high. If you're looking for a target, 65.85. So we're right there right now. On the monthlies, maybe just think about $70. I mean, but a huge run here. And probably some people probably got faked out too, because you had that monster run from 48 like to 61. You had a couple days of consolidation and then another move higher. So that one is looking good. Getting back. Let me see. Gosh, I got to go way back on here to find. No, I can't even find any resistance.
Don't know who that is right now. Let's.
Is that so?
Oh, that's somebody leaving a voicemail right now. So let's get rid of that there. Sorry about that, folks.
Well, you didn't cut off their voicemail, did you?
No. I guess I could have answered it, but then
But you don't know who you're.
I don't know who I'm talking to.
Yeah,
I don't know who I'm talking to.
we don't have a
right.
So, but it's great. Wow, our first call. That person gets a free trial to Benzinga Pro. And then Micron here. Micron climbing back.
Yep.
Oh boy, I wish you would have given me this upgrade a little while ago. Let's see what happens at $56. If in fact it can get there, up $1.89. Pre-market high comes in at 55.63. High of the move 56.11, and then someone was trying to wiggle out of stock between 55.70, right around that 56 area. So use that as a target. That's only 50 cents away, but on the dailies, just see a lot of congestion there. Along with the high of the move is 56.11. That's only 60 cents. So the only thing is if you do the you get the above 56, you go 56.10 bid, and then you get locked down at 56. You might be, a big offer comes in again there. So that's the area of importance. If you're trying to short this thing today, or you have a short position on, you and everyone else is going to want to see the top of yesterday's range at 54.14, or better yet, the close at 53.57. Doesn't look like we're going to see that though. Nice move here in Micron getting the upgrade.
All right, Dennis, good morning. For real.
I'm back. I told you it was a bad hair day. I got a little bit over here, but there was definitely no showering here this morning. I'll tell you that much. That's a fast market. I'm impressed with my wife. She has to do all that stuff every morning. It's tough. That's a tough job. That's a tougher job than my job.
Yeah.
Getting those kids, waking them up. The boy wants to sleep. I'm trying to wake him up. I'm like, buddy, it's 7:30. We got to go. You got to get your teeth brushed. You got to eat breakfast. You got to get dressed. And we got to hit that bus in 20 minutes. Let's do this.
Fast market there.
Oh, yeah. It's a fast market. It was a fast market all morning here. The girl's ready to go. She got up at 4:45 this morning. That's fun.
She likes to trade the pre-market.
Oh, yeah. She'd be good on the pre-market. The 4:45 show. So anyways, and then I'm like, okay, I'm trying to get her to go back to sleep. I bring her to another bedroom downstairs. I'm like, okay, we'll go camp, but we'll sleep down here. She literally lays there for 10 minutes, and then she wants to go to the playroom. So then I let her go to the playroom. I'm trying to lay down while she's in the playroom, and then she's back, and then she's there, and then she wants a snack. I was like, holy cow, it's 5 a.m. Slow down. So anyway, so I've been up since 4:45. I've been up for 4 hours here. That's why I'm wound up. It's like the afternoon for me.
Yep, the afternoon. So we were doing ratings, and we just got done with the Western Digital in the Micron too.
I'm just looking at them now for the first time. I see 1, 2, 3, holy downgrade central and upgrade central, but there's a ton of them. 3, 6, 9, 10. There's about 20 downgrades there. And then if we look, there's even more upgrades. So I'm just trying to see what strikes my fancy as well. FireEye, SunTrust upgrading. That's always interesting. I haven't looked at FireEye for a while.
We were talking.
What else? What other ones did you talk?
We talked just Western Dig and Micron so far.
Let's
but-
go talk FireEye. I haven't looked at that
well,
chart in a
we
long
discussed
time.
FireEye not in the context of the upgrade, but in the context of stocks that had good days yesterday.
Look at this FireEye chart.
Yeah.
Is Sean Udall still in this thing?
Yeah, he is.
He's been in this one for a while. This was not one of his better ones, but it must be working out a little bit better here lately. Good couple of days. FEYE looking hot. Now gets the upgrade here, and they're playing the breakout. I mean, who's upgrading here? SunTrust upgrading it to buy. Looks like they're looking at the classic breakout here. I see the same thing you're seeing, SunTrust. This looks like a breakout. So pullbacks to be bought. I don't like chasing stocks when they're up 3%, but I could see this thing continuing here.
Yeah, it's been, I mean, if you look on the monthlies, it's been on a long consolidation period, going all the way back to 2016. And $20, 2009, that was your high. That's been the high of the trading range. That's a high in December of 18. You showing the monthly on this one, Spencer? Because I know it's one of those dead.
Showing the weekly.
Yeah, same.
It's been dead money for a long time, but it's starting to show some life here.
And
this is interesting.
Yeah.
I'd be nervous to be short this one. I'm not coming in and saying fade this. Nope. Sometimes the ratings are classic fades. Not this one. Not my opinion.
And the Spencer failed an earlier test today. Let's see if you can remember who talked about cybersecurity stocks on our show a couple weeks ago.
Oh,
I was looking for them to move.
My goldfish memory doesn't go much past 6 seconds, Joel. I gotta remember who talks about cybersecurity.
It was Anne Marie.
Oh, was she?
Yeah.
And Anne Marie is a good trader. So when Anne Marie says something, I like this or I don't like this, I write it down. Anne Marie is solid. Anne Marie trades on Twitter. She's a good follow. We've had her on the show once a month or so.
Yep.
She knows her stuff. The technicals, this girl knows technicals.
Yep. Okay. Do you want to?
So was she bullish cybersecurity?
Yes. And then I made the comment.
Looks like she was right.
I'm like, oh, are we going to war? And then everyone got all mad at me. And then I go on vacation.
We are going to war.
Starts. Yeah.
All right. So FireEye, like you said, you talked Micron, Western Digital. A lot of these are smaller companies that are upgraded here today. KB Homes. I see that one there. So we got a home builder catching an upgrade from Raymond.
And DR Horton this morning.
They're giving the home builders some love. We haven't given the home builders any love in a while. Let's go check it out. KB Homes. DHI. Man, all these charts look the same. Not DHI. KB Homes, that's coming into resistance though. So that's the one issue, but maybe this pushes it above it. Good couple of days.
Let's see what happens at 36. I mean, these two things are notorious faders off.
Oh, they are. You got to be careful on these things.
Yeah.
But the environment for the home builders, really, can't be better. I mean, the interest rates are low. The Fed's got your back. It's hard to, find a reason to get bearish the home builders unless you think, all of a sudden everything's going to change and the Fed's going to start going hawkish on us here. I just don't see any reason to get bearish the home builders.
We've had two guests though that are looking for considerably higher interest rates. JC,
that would change things.
Yeah, JC thinks they're going much higher, right?
I mean, the home builders are a play on rates. There's, it's a direct play on rates as well. We always talk about the financials, obviously. The financials, obviously want higher rates. The home builders the exact opposite. They want low rates because, people are obviously going to build more homes if the rates are lower. So it's a direct play on rates. The rates have been low for a while, and you can see, and the rates have been going lower, and you can see they've been a beneficiary of that as well. 2019 is a great year for the home builders, as rates. Obviously rates weren't, I guess rates were kind of stable, but we started the year 2019, remember, with the whole hawkish stance, and they quickly backed off that and then started lower rates, and home builders benefited.
We do not have the Lennars tomorrow, right before the open.
That's what I was going to say. We do have some of these guys coming up here this week. So this is a light week for earnings, but is Lennar up? Tomorrow?
We get Lennar tomorrow morning, KB Homes Thursday after the close.
So this is a gutsy call to be upgrading it ahead of a quarter on KB Homes. So they obviously think the numbers are going to be good, or they wouldn't be upgrading it 2 days before they report. Usually you see analysts kind of quiet a week or two before the reports, because if all of a sudden they miss something, they look really bad. But sometimes you got to have guts, and they're coming in, obviously must be thinking that the quarter is going to be pretty good if they're upgrading the stock now.
It just seems like a lot of buildings still going around here in the Motor City.
There's buildings everywhere. When I was driving around this morning there in Windsor, it's traffic jams everywhere. It's busy out there. I don't see any recession.
Yeah, we didn't see one when the whole world was panicking. What was that, in the middle of the year, or was it last year?
Well, at the end of 2018. The end of 2018 was completely opposite to where we are now.
Yeah, inverted yield curve. Who fell for that trick?
Well, the media is saying 50 times a day on CNBC. Oh, every single time the yield curve's inverted, a recession has followed. Okay, well, we're a year from the inverted yield curve. Where's the recession, guys and girls?
No, nowhere to be seen right now. We got 3 minutes here before our guest. That's Ryan Detrick. He's
Ryan's great.
Strategist and LPL Financial. He has some interesting data to show with us here.
I got a level for you here, and LJ in the YouTube chat is looking at EA and ATVI. Look at ATVI. It's interesting here. Check out this 60. We're getting around and stared at it here this morning. Could this thing be? I'm long ATVI in the long-term portfolio, full disclosure, and I'm planning on sticking with it. But
that's
60 is a big level. I mean, it's bumped up here a few times. 1 time, 2 times, 3 times, 4 times. Eventually, it could take it out, and it'd be in a breakout.
The old
EA2 is breaking out too. These gaming stocks. I have Take-Two as well. That looks all right. Look at TTWO, same setup. 125, big number there. Bumping its head up against there too. These things look like they're gearing up to break out a resistance. Watch them for the breakouts. What? I mean, nothing is broken out until it's broken out. So, maybe we shouldn't jump the gun here. But above 60 and above 125 on ATVI and Take-Two respectively, those would be in breakouts.
No, look good. And Take-Two is near. That's almost back at its all-time high. It does have a pair of daily highs. This is called 125.25. Also, it bumped up against that area in December, and then the other high, if you get to that 125.25 area, things open up to 126.35. What's going on with Fortnite now? We still got
I mean, that's what put these stocks in the gutter originally.
Yeah, is everyone still on Fortnite?
I think everybody's still playing it, but I think these other gaming companies are coming out with some pretty good games as well. So.
I'll have to tweet at Drake and see if he wants to play another round of Fortnite. See if he can find.
Have you ever played it?
No,
neither have I.
But I know Drake does, right? Is it Drake? Yep,
probably.
Very, very good, Joel. I'm proud of you.
We've gone red here. We've got an absolute collapse.
This is the pullback.
Yeah,
this is the 3-point pullback on the S&P futures. This is now a pullback. We did get an economic number there, November trade deficit.
Oh my God, it must be absolutely.
Look at the tanking.
Jesus, look,
market's just falling out of bed. Market's in turmoil here as we fall one point.
Is there any?
The new market's in turmoil when we pull back 0.5%.
Is there any bids out there at all to be seen, Dennis?
All right, if you don't sense our sarcasm, that's our sarcasm.
You ought to start listening to
8:35. All right, let's go to a guest before we really come off the rails here.
All right, Ryan Detrick is a senior market strategist at LPL Financial. Ryan, good morning.
Good morning, guys. Thank you. Glad to be back, and happy 2020.
Happy 2020 to you as well. Hope the last decade was good to you. Give us your thoughts on the first week or so of 2020 and this bounce back we've had here.
Well, guys, I mean, let's put it in perspective, right? I know people have talked about last decade, how great it was. Stocks only down 1 year in 2018, which is interesting because that was also the best year for the economy. GDP 3%, earnings up 23%. Then last year we had obviously the best year for stocks since 2013, up 31% total return. Yet what happened? The economy weakened. And the first decade ever without a recession. So you add all that up, but what really caught us, and we wrote about this on our blog, lplresearch.com last week. If you look at the last 7 decades, guys, last decade averaged about 14.5% annual return. Really solid. I mean, everyone thinks it was a great decade, and it was really good. That actually is the 4th best out of the last 7 decades. The 80s and 90s were better. The 50s were better. So just putting in perspective, it really hammers home, I think, how bad the 2000s were, right? I mean, it feels like so long ago, but stocks were negative in the 2000s, 250% corrections. Last time we saw that was the Great Depression, and the 40s, 50s, 60s all did pretty good. So we're not saying we're going to have a 30-year bull market. There's going to be pullbacks. There's going to be down years, but it's just important to take a bigger perspective look at this. And yeah, it was a good decade, but it really wasn't one of the best decades ever. We've seen better. And after as bad as the 2000s were, hey, maybe, this thing can keep on going in the, not necessarily roaring 20s. That didn't end so well last time 100 years ago, but hey, maybe we can have another decent decade here.
I mean, Ryan, and I've thought about this too. We could consider, and if you're looking at, the NASDAQ especially, think about, when we were at 5,000 NASDAQ back in the year 2000. And we obviously had a decade lost already, really, when you consider 2000 to 2010, because after the financial crisis, we were significantly lower than the 5,000. We really never even recouped the highs on a lot of these stocks like Microsoft until 2 or 3 years ago. So, if you really think about, and in comparison purposes, I've done this, and I think I mentioned on the show before too, but you think about this 1968 to 1980 period where we really ran up, and then we consolidated. We hit the Dow 1000 like in 1968, and then we never hit it again until 1980. So we had like the lost decade in there. After that, we went up tenfold. I mean, you could almost, and maybe valuations aren't as cheap as they were back in 1980, and obviously interest rates aren't 17 or 18% anymore.
Sure.
Which is, so it's a different environment. But for people coming in and saying, oh, we're so overdone, I mean, people who bought this market back in the year 2000, some of them are just getting back to even. AMD just got back to where it was in the year 2000. So we might just be getting started in some of these. Like, I don't know if we're in the late innings.
Yeah, doesn't that make a lot of people mad to hear that? People have been, I remember back in 2010, literally being on Fox Business, being bullish, being laughed at on TV. Like, I mean, it was unbelievable, the attitude that we've seen, the hatest bull market ever. And just put in perspective, what are financials doing, right? Look at XLF. It's just breaking above where it was in 2007. As we talked about, 21-year basis coming out of Europe. The NYSE composite, 1,900 stocks, about 1,500 here in the U.S., 1,400 globally, just breaking out to new highs above 2018. So that's saying it's gone nowhere for literally 2 years, the NYSE composite at least. Small caps aren't even at all-time highs as we speak. So there are some, I mean, believe me, up 31%. One of the things I sent you guys was how stocks do after a 30% gain. And it's important to note, normally you get a pretty good year the next year. I mean, it's happened 12 times since 1950. S&P's up 15% on average. Who wouldn't take a 15% year after a 30% year last year? I think most of us probably put our hand up. Also, it's pretty rare to have a recession that next year. Is the stock market forward looking? Believe me, nothing is perfect by any means. I just mentioned how good the economy was in 2018, yet stocks were down. But still, usually strong gains suggest potential double-digit gains the next year, and you usually avoid a recession. I mean, is it that simple? Maybe not. I mean, we got the geopolitical concerns and things like that swirling, and it's an election year, so there's going to be lots of things there. But hey, overall, people continue to doubt this bull market. We're going to get corrections. The biggest pullback we got last year was 7%, okay? I mean, normally you're going to get about a 10% correction. So we fully are aware we're probably going to get a 10% correction this year. But when all is said and done, we don't think this bull market's over. And we consider things like value, which has underperformed for 10 years, and financials are just breaking out above the 2007 peak. Hey, maybe value, emerging markets, some of those beaten up things that haven't performed well, maybe they take the baton for a chance and just, that's the way bull markets work. People take turns.
I mean, the emerging markets, so if you look at the EM, and there is some currency effects in there, but if you're just looking at it on US dollar basis, when 2013, the EM was $44. In 2020, the EM is $44. I mean, if you're just, backing up, if you're just an EM investor and not worrying, not considering the currency here, I mean, it's gone nowhere.
No, that's exactly right. You talk about, so that's kind of the technical front where it's gone nowhere, which I think is encouraging, right? If money starts to flow there. We think the dollar is going to go gently lower here. The Fed's on pause, as most of us know. Foreign current, look at the Canadian dollar, right? Breaking out. I mean, a lot of these other currencies are doing well, so that could pressure the dollar lower, which is a tailwind. Last thing on the fundamental front, if you look at earnings, earnings in the U.S. this year, we think could be between 5 and 7%, just the long-term average. Emerging markets earnings this year, guys, could be very well double digits. It's expected to be up 13 or 14%. We think maybe comes in a little lower. But hey, if you get some good news on trade, if you get a little bit lower dollar, emerging markets are an area of the models that we run for our advisors and for their clients. We are definitely a little bit overweight emerging markets in 2020 as we think that rotation can kind of take place, and you can find some alpha in emerging markets, an area we definitely like this year.
Ryan, do you think the fact that we saw two bad recessions in the same decade, one of them being the worst since the Great Depression, do you think that like clouded people's judgment a little bit and screwed up people's frame of reference for how to invest in the long term?
Yeah, we do think so. That's a great point. And you guys were talking before I came on about the yield curve. Remember how the yield curve was going to come and kill all of us back in late September and early August when that happened? And I'm sure I came on with you guys and talked about it. Stock markets do better 18 months after the 210 inverts. The 210 inverted finally, I think it was in late August. I know some of the shorter end of the curve inverted first, but just because the yield curve inverts and the media run with it, and you know, it's clickbait, but I mean, you got to look at the numbers, and that's not the case. But we do think that that's absolutely true. And let's talk about the economy. Right? I mean, we just went a whole decade without a recession. I talked about it. We're going about 2.5% GDP growth, okay? Nominal GDP growth during this cycle is only about 26%. That's not all that great. In fact, that's about the average cycle of growth. So we've gone for 10.5 years out of recession, yet the average cycle is about 5 years, guys, but the growth is about the same. So what I'm getting at is this cycle's gone a long time, but by no means has it been impressive. And that's what we've seen around the globe, right? I mean, low inflation, low growth. We get the demographics and, you know, people going on Amazon buying stuff cheaper. I mean, that's some of the factors that have played in. Believe me, smarter people than me don't understand why there's not been as much growth, so I'm not going to pretend I know it. But the fact that we're just growing at 2.5% to us is the reason this cycle can continue. Look at our friends in Australia. You know, shout out to them, you know, what they're dealing with the fires first off. But they've gone 28 years without a recession in Australia. Just because we've gone 10.5 doesn't mean you got to fall into recession. Developed markets can go years without recessions. We really think the U.S. can maybe kind of play along with that theory there.
Especially when the Fed's defending it. I mean, when you got your Fed at your back, they're smoothing it out. So
you're not kidding. I mean, I think I might have mentioned with you guys. You know, we looked when the Fed cuts rates within 1% of an all-time high, and they did it 3 times last year for what it's worth. A year later, it's happened 17 times since 1980. S&P higher every single time. So when the Fed's cutting rates with stocks at all-time highs, that's a tailwind. That's what history tells us. History is a guide. You know, I'm aware. You know, it doesn't always work, but that's one thing we're not going to bet against, in our opinion, here this year in 2020.
Ryan, I want to pull up this table you sent us of just the market's reaction to shocking geopolitical events here, and just to go through this this pattern of what you've observed through history of the market's reaction to some of these events. When we look at this bounce back from this week, from the strike in Iran last week, it puts us into perspective here.
No, it really does. And first off, thanks to my friend Sam Stovall at CFRA. He kind of crunched the events here. These are the top 20 major geopolitical events going back to Pearl Harbor, and the numbers are the numbers, right? I mean, you tend to get a bottom about 3 weeks later. Stock market sells off about 5% on average, you know, so it makes sense. But the bottom line is within 2 months after those lows, you're back at new highs. So we're not minimizing what's happening in Iran or any of these things for that matter, these geopolitical events. But the bottom line for investors is that the economy continues to be strong, you can still have gains. And don't forget, and I pulled it up here, one of my favorite market stats. Give me 1 second, guys. I've got it. In 1915, the Dow Jones Industrial Average, I'll get there, 1915, was up 82%. In 1915, the Dow Jones was up 82%. Something else that happened in 1915 was World War I. Okay, so just because we're having war, I mean, as terrible as that is, from an investment point of view, stocks can sometimes go up in that environment. And they sure did in World War I and some other times as well, we've seen. So, you know, we're following it closely. You can get the near-term volatility, get the headline risk. You've got the impeachment out there. You've got an election year. You've got potential other countries trying to poke the bear during our election year. We're aware. So we're watching it all. But, hey, the economy, in our view, the consumer makes up almost 80% of GDP anymore, it feels like, is where the growth is coming from. The consumer is still strong. Business investment's light because of trade. We get good news on trade, which we expect. Business investment can come back, and this cycle can keep going. We'll have pullbacks, but it doesn't mean we have to go to a recession or bear market.
So let's talk specific sectors. Is there a sector or industry that you like more than others for the year?
Yeah, I mean, I can't talk individual equities, but from a sector point of view, we still like cyclicals. We liked them last year. We like them this year. And I kind of talked already. You know, we've talked a lot about tech, right? Tech was up 50% last year. And you guys talk about, you know, AMD and different names. I can't give an opinion on that. But with tech, man, it's up a lot. So we've ridden that train. We're thinking maybe lighten up a little bit on tech. Like I said, moving to financials, which are just breaking out above the 2007 peak. We like industrials. You know, we went into the defense area recently, and that clearly did well with what happened in Iran. So we like those areas. areas. Like I said, we like emerging markets. And the healthcare is one we're actually actively talking about upgrading as well, kind of depending on who the next Democratic potential president could be, might move healthcare a little bit more. But that's kind of a wild card group that we think has a definite potential this year as well.
What about energy here? We've had some a divergence of opinions on this show about energy. What are your thoughts?
You're not kidding. That's the sexy call this year, right? Because it has underperformed forever. But on a relative strength basis, when we look at energy stocks versus the S&P 500, it's still making new lows. I mean, I get the allure to it, and clearly if oil keeps spiking higher, but we're underweight energy, and we're toying with the idea of going market weight with it. But right here, we need a little bit more strength on some relative strength basis on some of the energy versus the S&P 500. But that's the sexy call this year. I saw a stat, Apple's market cap's worth more than the entire energy sector. I think I saw that on Twitter. I'm not sure if it's true or not, but someone tweeted it. I mean, that's wild if that's true. You know, those are the contrarian indicators you look for that say, oh my goodness, maybe it is finally time to dip your toe in, but we're underweight energy still. We need a little more confirmation first.
This has been the market, though, in the last 5 years, where if you're trying to be the contrarian and trying to call the bottom or trying to call the top, you just keep getting the beats. So, me and Joel have always been natural contrarians, and I've had to almost adjust all my trading just to go with the flow and go with the trends because, I naturally like to fade. I want to be the hero and call the top. I want to be the hero and call the bottom in energy. And it's been a very difficult thing to do. And I just don't, there's a lot of people trying to do it here again. It's tough to do.
Yeah, that's camp I'm in. We've gone to MLPs a couple of different times for some yield and kind of been burned as well when the technicals didn't support it. Maybe the fundamentals did, a good yield, and we've been burned a couple times. So when it comes to energy, I really need to see the relative strength turning higher before I can comfortably dip my toe in. I just think financials breaking out, industrials breaking out, tech, keep riding that train. Those are the groups we're going to stick with. They brought us to the party, but we're sticking with them in 2020.
And you mentioned the election year cycles. Any comments on that?
Oh, you tend to see a little bit more volatility, but most of the gains do happen late. Think 2016, right? I mean, 2016, we had a massive rally after the election. The Dow had a record 9-day losing streak ahead of the election. The thing that we like to point out, and maybe you've had some other guests talk about this, but the 3 months before an election, if stocks are up, the incumbent tends to win. If stocks are down, the incumbent tends to lose. It's happened 20 out of 23 times, worked every time since 1980. So as we get closer to the election, how the stock market's doing could give a little bit of a clue. And then the other thing I love to point out, in 2016, copper had a record 14-day win streak directly ahead of the election. Kind of more of an industrial play, honestly, what was considered more of a Trump play. Copper in the stock market accurately, I think, predicted the who was going to win the presidency. So let's pay attention to what the intermarket analysis is telling us as we lead up to this election. It might give more of a clue.
And anything you're staying away from? I mean, you mentioned you're a little bit tepid on the energy sector. Is there anything like pot? Can pot get hot in 2020 after a dismal 2018 and 19? Anything you're avoiding?
Yeah, I mean, the Develop International is one that we're still underweight, and I'm aware that that's another sexy call this year, kind of with Europe breaking on a 20-year basis, but we still need to see more there. We like the U.S. and emerging markets over developed markets. Then your defensive names, your REITs, your utilities, those are the areas we've been underweight, and we relative strength rolling over, and we kind of continue to see that play. And, you talked about rates before I came on also. Kind of like what JC thinks. We think rates can go a little bit higher this year, maybe higher than some people expect as copper is starting to turn up, industrial metal is starting to turn up. So, higher rates could kind of impact bonds, obviously, and bonds were short in duration by buying higher quality bonds. And we like mortgage-backed securities. We think a little more yield there and higher yields mortgage-backs can be an area that people could find a little bit outperformance in their fixed income portfolios this year.
All right, we've been on the line with Ryan Detrick from LPL Financial. He's their senior market strategist. Ryan, thanks so much for the time today, and we'll talk to you later in the year. Have a good one.
Thank you, guys. Appreciate it. See you soon. Take care. Bye-bye.
Thanks, Ryan.
All right, it's 8:50. You got 10 minutes left in our show today. I want to play a voicemail that somebody left us a few minutes before Ryan hopped on. Let me play this voicemail. I hope it works. We got a phone call, and I listened to it while Ryan was on with us. And let's play this person's voicemail now on the show, and hopefully this works. Trying to play it right now. 1 second.
Okay.
I don't know. All right, hold that thought while I figure out how to play a voice. Oh, there we go. Okay, here we go.
What's up, pre-market prep? Just saw your phone number dropped on the morning show. Figured I'd give you guys a holler. Quick question. I'm a smaller account guy. I'm underneath the day trade limit of $25,000 to have unlimited day trades. I was wondering if you guys had any advice for us smaller guys out here with 3 day trades a week. Thank you.
All right.
Love the show.
Any advice for smaller account guys who are under the pattern day trade limit rule?
Yeah, this came in, I believe, during the financial crisis. And if your account's under, is it 25,000? I think it's under 25,000. Then your pattern day trading, you're allowed, I think, 3 trades a week. They just didn't want, I guess, I don't know, after the financial crisis, they want people blowing out their account. I'm not sure exactly why, the reasoning why they don't want them churning, but that rule is in effect and obviously applied across brokerages there. You've just got, if you've only got 3 trades a week, you got to make them count. So what that means is you just want to swing at the pitches that are right up the middle. Look for the cleanest setups that you can get. Because if you're, looking, you're guessing, you're not seeing it right away, move on, especially when you only have 3 trades. I mean, I sometimes make 3 trades a minute, so it's very difficult for me to even, grasp. But I just think what you got to do is make sure you're only swinging at pitches right up the middle. So look for the cleanest setup, look for all the ducks in a row, and go after those ones. If you got to look through a couple hundred charts to find what you're looking for, there you go. And obviously you got to have a longer time frame too. So you're not going to really be a day trader if you're only going to do 3 trades a week. You got to look right to the swing trading environment. But there's some excellent swing traders that are out there. I mean, Jeremy Newsom doesn't make a ton of trades either, but he looks for the cleanest setups and does them really well and makes money every month because of that. There's some days that Jeremy doesn't make any trades at all. Other days he'll make some more trades, but he's very consistent. So there is, obviously some very good traders out there that don't trade as actively as, say, somebody like me.
A lot of people are saying here that a cash account with no margin, that you could trade options with no, you could trade as many options as you wanted.
Options are different.
Account. Okay. And then a couple other people are saying, I don't know how much money you have to, to have 2 accounts, so you could theoretically get 6 trades. I guess the best thing is just get conservative and get that account over 25 grand. And, then you don't have.
What if he doesn't want to be a pattern day trader? He just wants to make.
I think I think he's just got to go. Just look to the swing trades. Just look for those cleaner setups. I think, and a lot of people come on and they somebody like me making 200-300 trades in a day. I'm doing different things. I'm taking advantage of a lot of efficiencies. I'm using some automation. It's a whole different level. I mean, really, to make a living at this, you only need 2 or a couple. You could totally still, it's tough with only $25,000 or less than $25,000. But if you're just trying to make some extra money, I mean, there's good ways in this market, and the market environment's been very good. With the bull market that we've been in, just looking for those clean setups. I mean, even like what we were just talking about, ATVI. If that thing gets above 60, then you're in a little bit of breakout mode, and that's a cleaner setup. So it's got to get above 60, but I just say flip through a lot of charts, looking for the cleaner setups, know where your earnings are happening. And, obviously there's run up sometimes and there's different strategies that we've talked about there. But I think you got to look at the time frame. If you only got 3 trades a week, you got to look at the time frame where you're, holding trades more than a day. You're looking at, setting up, okay, I like this for the next week or 2 and looking for those cleaner setups. And if you're in that time frame, you should be able to still make some money, even if you're only have 3 trades a week.
It comes down to pick your spots, I guess. Pick your spots.
And people are saying if it's pure cash account, and then it's different if you don't have a margin account. So none of this applies to me. So I feel bad because I know the pattern day trade rule exists, but I don't know all the details of it because it doesn't apply to any of our traders at Bright Trading. So I think they're right though. I think if you've just got a straight up cash account, you should be able to make more. I mean, if you're just not using margin, I don't see why you wouldn't be able to make more trades.
Yeah, I believe that's right. I have a.
We can research.
I'm trying to think. I've done that myself, but yeah, I believe it was the cash.
It's not my wheelhouse because we're at Bright Trading and we're using prop money. It's completely different.
Anyway, thank you for that phone call. That
was great.
I don't know if I'll always play the voicemail like that. I like that voicemail a lot, which is why I played it. I don't know if I
Yeah, I like that.
We'll always play.
I think we should have callers be able to call in too.
on
I
the
mean,
show.
the
We
logistics
could.
of that
I
makes
mean, we
it.
could expand the show by like an hour and a half if we had callers, just like sports
Right,
radio.
but we also
Let's do it.
We're going to be the Jim Rome
No, we're
of.
not.
Yes, we are.
Sure.
We are. And what are we call it the jungle? We could come up for a different name than the jungle because we don't want to rip. And we can have clones. I mean, come on.
What are you talking about?
He's went on a big tangent here. This is
What
a
are we
wild
talking
tangent.
about right now?
We need to get Jim Rome on, see what he thinks.
All right.
Have him do some consulting.
Let's look at imbalances here for a second. I'm going to take this away from the Clone Wars. Imbalances, Macy's 59,000 to buy, Disney 79,000 to buy. Those stand out. Johnson Johnson 38,000 to sell, Procter Gamble 37,000 to sell. So again, a little bit of money coming out of some of the defensive. We have leaked a little bit, trade down 6 handles.
Yeah, we
CRM,
are.
which had the hell of a day yesterday, like holy cow, this is a huge move. Looks like some profit taking at least this morning. 40,000 shares to sell here on CRM, at least at the open. So you're seeing some people book some profits. General Electric, eternal sell and balance, 100,000 to sell here again today, despite the stock going up like crazy for the last 3 days. So it's been a buy into that sell and balance every day so far. But again, that sell and balance still seems to be there every day.
Let's look at Mickey D's here for Alex Joseph.
Sure.
I wonder if that's the big guy tweeter that always follows us, gives us a
back up above 200.
Yeah,
this is interesting actually because it's been so out of favor here since our last report, and then it continued to drift. And you got me on that bet just by the skin of your teeth. I think I can't remember exactly what it was, but I think when it fell under 190, you won that lunch bet from me. Yeah. And obviously it's, that was the day it bottomed and it came right back up, and now it's back here at 202. It looks like breakout mode. So I'd say above 200, I like it. I would not want to see it fall back below. Let's use yesterday's low, 199.35. If you're longer right now, that would be my stop out. And then setting up a swing trade for you, even for the caller who obviously had the margin day trading or the pattern day trading restriction. So I'd say 199.35 would be my stop out. If I'm going long this thing, maybe you could pick it up on a pullback at 201. 201.5, risk yourself a couple of bucks, and you're looking for this thing to potentially get back up and fill that gap from earnings.
There you go. I was just going to say here that, as long as you get a little bit of a kind market here, you get up to 205.25. That's what I'd be using as a target. That's $3 away. And then you got a gap between 05.25 and 208.44. A lot of times, it'll fill those gaps or at least start to get into the gap. So I'd be looking at that. 202.45. That's your current price, up 12 cents. Last two lows, not really that. I call 199 because you had a 98.85 low, and then you had a 99.35 low. So there you go. I like the support there at 199 here in Mickey D's.
One more thing I'll just hit on before we wrap the show up. Dennis, is the New Year's 2020 party over for SAVA Sciences, SAVA?
Yes. I'm going to say yes.
It was a fun
and it was crazy. This thing kept going up. And is it, is there going to be another insider buy that drives it higher? Maybe. But now you've got, it didn't make a new high yesterday. That was an ugly candle for yesterday, peeled off and closed near the lows. For the same reason I was calling the Rite Aid. Sometimes these squeezes are easier to call sometimes than some of the other ones. But when Rite Aid was on the show, I was like, I felt like even that big day when it was $22 on the show, I was like, I feel like this is upside capitulation. And this thing's going to turn. Then the next day, somebody was asking me, or somebody was asking in the chat about Rite Aid, and I was like, I think every rally to be sold here now. I think it's over. That was when the stock was 17. That day it closed at 14. Now it's at 13. So these things end ugly. I said SAVA will end ugly. I think we have seen the top. I mean, it's impossible. Maybe something else happens. Maybe there's news that comes out, on a potential, on their. You said they have one drug in the works. Didn't you say that?
Yeah, the Alzheimer's drug.
Yeah, so there's always that realm of possibility, but just from a pure technical basis, that is an ugly candle yesterday, and I think rallies to be sold here now. Just talking technicals, not fundamentals.
All right, S&P is just kind of a slow cash.
Yeah, we're leaking.
Yeah, down 5 at a
trouble.
Yep.
Trouble in paradise.
Didn't like some of those numbers that came out. We'll see what happens. The next area of support for me comes in at 25.35. We'll see if we can catch a bounce there. Below that, kind of a thin day yesterday, so not a lot of major support in there until you get down to the area of Monday's interday low, 13.25. Super big important numbers. Friday and Monday's low were right next to each other, 06.75, 08.75. long ways from there. We'll see what happens.
All right, that's it for our show. Give us a call, leave us a voicemail, 734-494-0246. Also catch the replay of our show on YouTube or our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Spotify. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your day. Thanks to our guest, as always, Ryan Detrick. Thanks to all of you in our chat. We'll be back with you for our next show on Wednesday.